Welcome to this explainer. If you've ever felt like buying a home is just totally out of reach, maybe you're like our friend Alex, starting out with a thin file or literally zero credit history, and the whole system of banks and credit applications just feels super overwhelming, well, you are in the exact right place. Today, we're walking through the definitive blueprint to transform a non-existent or misunderstood credit profile into the keys for your dream home, and hey, maybe even your next car along the way. We're breaking down some highly effective insights from Santana Sourced solutions to give you a clear, actionable path forward. So let's start by addressing the massive elephant in the room. Do you really need perfect credit to buy a home? Honestly, this is probably the biggest, most intimidating financial myth out there. It causes so much unnecessary anxiety and literally stops people from even attempting to fill out a credit application or talk to a bank.
Okay, let's dive into this. The myth tells us we need an absolutely flawless score, right? But the reality? You really just need healthy, consistent financial habits. Modern scoring models like FICO 9 and your standard mortgage lenders, they aren't looking for absolute perfection. They're looking for a track record of responsibility. They just want to see that you have a structured, reliable system for managing your money and paying it back over time.
I absolutely love this quote from the Santana Sourced Solutions Guide. Credit restoration is a journey, not a quick fix. This is so crucial to internalize as we get started. It's not about trying to hack a bank's system overnight, you know? It's about building a solid foundation that will steadily support your financial legacy. Because consistency, that's what actually creates results. To win this game, you really have to know what mortgage lenders and the big credit bureaus, we're talking Equifax, Experian, and TransUnion, what they are actually looking at. Sure, they look at your overall score, but they dig much, much deeper. They're analyzing your payment history, your outstanding debt, your credit utilization, the actual length of your credit history, and any recent credit inquiries you've made. But here's the thing, conquering those checkpoints unlocks some absolutely incredible rewards. Taking control of your credit profile doesn't just get you a simple yes on a loan. It opens the door to specialized first-time home buyer programs. It secures much lower interest rates on that new car loan you might need, and it drastically reduces your monthly payments. Building this foundation literally saves you thousands of dollars over the life of a loan. It's a real game changer. Section 1. Busting big credit myths. What's holding you back? First up, a really dangerous misconception is that carrying a balance from month to month somehow builds your credit faster. Guys, that is completely false. Paying your bills in full and on time is what actually matters to banks. You never ever need to purposefully pay interest just to prove you're responsible. Actually, scratch that. Doing so just throws your hard-earned money away. Another huge trap is believing that closing your old credit cards automatically helps your score. No way. Closing old accounts can actually shorten your length of credit history, which is a crucial metric. Keeping older, responsibly managed lines of credit open is basically a secret weapon that strengthens your overall profile in the eyes of the bureaus. And then there's the belief that a high salary guarantees loan approval. Well, your ability to manage debt, which banks often measure as your debt-to-income ratio, is just as important as the size of your paycheck. Lenders absolutely need to see structured, responsible habits. Because honestly, you simply cannot out-earn poor credit management. So what does this all mean? If income isn't everything, and keeping those older accounts open is key, how does someone like our friend Alex, starting completely from scratch, actually become mortgage ready? What are the actual, actionable steps to build that rock-solid financial foundation? Well, here is the definitive 5-step credit restoration blueprint pulled directly from Santana Sourced Solutions. It breaks down into this: reviewing your credit reports, paying every bill on time, lowering your credit card balances, avoiding unnecessary new credit, and finally, creating a monthly budget. Let's break these down to see exactly how you can apply them today. Step 1 is to review your reports from Equifax, Experian, and TransUnion. Basically, you are going on a hunt for errors. Look specifically for incorrect personal info, maybe duplicate accounts, or inaccurate collections, and dispute them directly with the bureaus to protect your profile. It's like a giant puzzle, and you need all the pieces to be completely accurate. And this brilliantly illustrates step 2, pay every bill on time. Seriously, your payment history is one of the absolutely biggest factors affecting your score. Set up those automatic payments and use calendar reminders. If nothing else, always pay at least the minimum payment before the due date. Consistency here is just non-negotiable. Moving on to step 3, let's talk about the golden baseline rule for your credit utilization. And that number is 30%.
You should always aim to keep the balance on your credit cards below 30% of your total available credit. But you know what? To truly stand out to lenders, we can do even better.
If you want ideal credit management to really impress mortgage lenders, you want to push that utilization down below 10%. To put that into perspective, if your credit limit is $1,000, you want to keep your balance under $100. This super low utilization actively demonstrates highly responsible management and maximizes your points under models like FICO 9. All right, steps 4 and 5, avoid new debt and create a strict budget. Listen, every time you submit a new credit application, it generates a hard inquiry, which actually dings your score. So only apply when it serves a very clear financial purpose. Meanwhile, sticking to a solid monthly budget helps you rein in unnecessary spending and builds that vital savings you're going to need for homeownership expenses.
Section 2, the final sprint, your home buyer checklist.
This checklist right here recaps everything we've built. Continue to pay your bills on time, keep those balances super low, and actively build an emergency savings fund. Whether you're aiming to buy a car in 6 months, like Alex building up from zero, or you're applying for a first-time homebuyer program in 2 years, these are the exact healthy habits required right before you apply. Now, the bigger picture of why we do all this is really about community and legacy. Santana Sourced Solutions operates on this incredible standard to break cycles, create impact, leave a standard. You see, their credit education and budget planning aren't just about getting a loan approved. They are about restoring your control and building long-term generational legacies for you and your family. Every move today builds your future tomorrow. I just love that. Every positive financial decision you make compounds over time. Going from having zero credit history to holding the keys to your new car and eventually stepping through the front door of your dream home, well, it all happens one on-time payment at a time. Which brings us to our final question for you. Are you ready to take the very first step on your journey to home ownership today? The blueprint is literally right in your hands. Don't let those myths hold you back anymore. Go check your reports, set up those reminders, and start building that strong financial foundation right now. You've totally got this. Thanks for learning with me today, and I'll catch you on the next explainer.